So, hello, and a massive hello to everybody. How we all doing? Rocking and rolling in a free world. Hope everybody's having a great weekend wherever you are, whatever you may be doing. This is 50 pips. Let's do this. 3rd of March, 2019. Can you believe it's already March? Where is the year gone? Well, let's get this party started. So, busy week going in. We're going to have an awful lot of data out of the RBA, GDP, retail sales, but we got a rate decision out of the RBA. We got a rate decision out of the BOC. We got a rate decision out of the ECB, and we've got non-farm payrolls on Friday, with that unemployment data, not only out of the US, but out of Canada too. So it should be a very busy week also on the data front. Now, the tricky thing here is that we are really in a low liquidity chop, which is in a headline driven market. And essentially the algos have got this, right? So the machines have got this until we get some kind of real development. So it becomes very, very difficult to try and trade pure technicals simply because all it takes is a headline, and you get a lot of whippy moves. You could get head fakes, you could get spikes. So it's tricky to just base your view on the technicals, which we always like to do. You have to be aware of what the headline flow is doing. Now, in terms of the charts, here we've got the weeklies, right? And it's still the same thing in terms on the equities, right? What we have is essentially 2,700 on the ES, 25,000 on the YM, 1,600 on the Russell, and 7,000 on the NASDAQ. Those are the key bull bear lines, right? And you see we're holding above all of those except for the Russell. So that's really the level to keep on the radar, right? Any kind of dip, right, excluding Russell because well, but any kind of dip, NASDAQ into 7,000, ES into that 2,700, YM into that get bid absolutely change nothing in this ramp. Of course, it's quite an unusual ramp if you see the aggressiveness of the move. As long as those levels catch bids, we're still going to be forced to expect the grind to try and take out highs, right? If we lose those pivotal levels at any point throughout the week, then things could start to get interesting. Now, as we've said, clearly FANG has stalled, right? And then that's been apparent on the action we've seen in the NASDAQ, but really the one to watch, which was the lead on the way down, is clearly the Russell. Here's the same quad screen, but we've got the dailies here with the 200s, and you see that the Russell is the only one that's holding with YM above, NASDAQ above, and the ES above. So that's really the key to watch. Watch around action around those pivotal levels and around those 200 DMAs. We still want to highlight the fact that, again, FANG isn't moving, is really stalling, and that Russell is still the key in our opinion. Now, if we look at some of the other charts, so that major indices, major charts, bonds are a little bit tricky here. Now, our expectation was that this break outside of this chop zone, which we'd highlighted here, which you can see fairly clearly if we go back on the monthly, right, which is a key hold, right, for the rotation higher to start again. Our base case scenario was that this hold here was going to try and force this move back into the 200 week. But clearly it's not. The ramps continue on equities, and here we've got a smackdown, right? So what we would watch here is, again, it's tricky to read anything too much in this area. You might want to look at the 50 week here, how action behaves here around this 142 mark. But it'll be very telling how we behave, but we would not be surprised to see this try to rip back higher. But here you could easily hit an air pocket and things could get ugly. So we'll be watching this closely. We still think that longer term any dip is an interesting buy for this to, in the mid to long term, try to resolve itself higher. Even if it's going to go lower, we'll have to be patient and see what gives there. Now, on crude, basically has been behaving quite nicely in the sense that we're struggling around this 55. As we discussed on Twitter and as we've been discussing, is you have to pay attention to the Trump tweet high, right? Once it gets back here, you do not, either Trump's going to start tweeting again, or you'd expect to see a lot of sellers coming back into here. And this offered very nice asymmetric risk reward. So we really like this area to the short side for a move back into the 55. Keep in mind that this really doesn't change. It's 55s, 50, and then you got that 60 to the upside. Now, the key test here, and also because the heightened correlation with the S&P here, equities and crude, is going to be very, very interesting, especially as they've released all these more. We're going to get more headlines on China deal done, China deal done, China deal done. And also, this is going to be an interesting 2-week period as we go to OPEX, right? Is this just predestined to go sideways, to chop higher in terms of risk, to go sideways, to chop higher through OPEX and through the end of the month, when we're going to see, you know, Brexit or this China trade talks or deal or possible deal, God knows what, or is something going to spoil the party? And crude clearly is something to keep an eye out for, because if we see this continuing to trade heavy, and if this closes below the 55, we would not be surprised to see the low 50s come very, very quickly. So this is probably the most important chart to keep an eye out for early on in the week. But again, it's trying to rotate higher, but we think any close below the 55 gets very, very interesting. And for those of you who shorted here, as long as you get a close below the 55, we'd be aggressive with partial holds to see a quick acceleration lower. Now, gold, what's going on gold? Gold, as we said, we've been very, very bullish on gold. We're looking for those 1350s, but once you come back into that big resistance zone, you do not expect it on no news or no catalyst to go knife through butter through it. And especially that reversal on the daily was a beautiful short setup. Now, the key question here is how to look at this now. Now, our base case was that the percentage play was for those shorts here, stop above those highs, was to look for a move back into the 1300 or 1290, because we had this whole cluster here. Now it gets a little bit interesting because you know, the same levels apply, but if it can break below this area, you know, you wouldn't be surprised to see 1250s come very, very quick. So technically, I think 1300 holds the key. As long as we close below 1250, could easily come back in the cards. But I would say if you're looking to hold a structurally bullish position here, I would probably start nibbling here, because if it goes quick, you don't want to be the only one left for that 1250 or lower. I would start to scale into the position smalls, nibbling, but I would want to have something on sometimes this week as we hover around this area, and then work to build, even if we trade lower, for that bigger, you know, for the bigger move higher. But you know, this could be this could easily retrace a lot more, even to the 50 back. You know, what's the 50 back? Let's put it up here. So 50 back of the move from lows into those highs. You see, you've got a lot of confluence here, right? It's just that you almost have the feeling that it's almost too good to be true, that you could be sitting all the way back down and catch it at 1250, because it's a nice zone, right? You've got that 200 coming in, and so I think this would be the ideal place to get a nice long back for the next leg higher. But I'm just saying, the way things are trading, because of the headlines, I'd probably want to, if you're looking for this position, I'd probably want to scale in a little bit early, right, to make sure I had something on. Now, what else have we? DXY. What's happening on the DXY? So Trump's been on the wires again, talking about how he doesn't want a strong dollar. So ideally, this is going to work in our favor. We're still short here. We're still looking for this to come back down towards the 94s, 92s. We'll have to see how this plays out. There's nothing much to add here simply because this is very choppy, and as we've said a gazillion times, you can make a good case for the long side or the short side. We happen to favor the short side for now, so I don't think there's much I can add here. So what I wanted to go through briefly is some of the Forex pairs, right? So GBP USD, a lot of questions on this. What's happening? Well, basically, it's tricky because there's been a lot of headline over the weekend. Our base case was that the reversal here back into a key pivotal level, as we've discussed, was a beautiful little short, very nice asymmetry here to play for the move back into the 132s, right? Now here, the big question is, how do we behave between here and here? Because this could be a little bit of don't be confused by velocity of move inside range. But our assumption, especially if post the kind of bullish GPB headlines we saw over the weekend, well, we got some countering one. If we close Monday below 132, we're going to stick with our original call here, is that at the very least, we're going to see this retrace all the way back into the 129, 128 zone. So especially if we get a day close below this 132, we like to hold the shorts for the bigger move lower. Now, a lot of the questions come in is, how far can this go if things look good, or how ugly is this going to go if things look bad? Well, I think the real question is that the real answer is that's anybody's guess. I think most people are talking about parity, all the way to parity if this goes completely paired shape, or 150 higher, 160s if everything's solved. I think if you just look at it in terms of the chart, which is tricky to look at it in terms of the chart, but I would say that to the downside, the way I would do it, which I'm not a huge fan of, is I would look at this move from highs to lows and say on the way down, you would be looking for the move back into 106s, right? At the very least, if this breaks down hard, and that will into the 150, that means parity. So anyway, 106 into the parity mark, right? On the other hand of the coin, if everything's beautiful, the way I would look at this is essentially, well, you see this is that breakdown zone. Once we had the referendum, etc., everything looked ugly. At the very least, you would expect this to come right back into that zone. So that would be 150, possibly even higher. I think it's really tricky if you're trying to express an opinion through the spot market, trying to play for these moves. It's much better to trade that through the options market. But those are the upside and downside I would be looking at. Shorter term, again, very hard to trade with all this headline risk. I think the easiest way to look at this, or the simplest way to look at it is that unless we get something really, really bullish GPB, this should be a short-term top, and the healthy move would be a little bit of a move back into neutral, which takes us back into the 109, 128. That's the way we would look at that. Now, in terms of BOC, so USD CAD, as we said, we're trading this live actually in the webinar on Fridays. Once you got that horrible GDP print, the only thing you could do is close your eyes and get long, really. And you see how, it's just the classical one. You get trapped shorts. We'll be covering on any kind of dip all day. So you see what happened. We rip higher. Oops, sorry. That's not what I meant. Oh, something's wrong with this. So basically, we ripped higher. Very, very shallow pullback back into the previous day highs, and it's just grind higher all day as trapped shorts are in trouble. So here, bigger picture, if you look at it on the weekly, what's going on here? What's Polos going to say? What's going to happen? Well, you see there's an awful lot of support here, right? You got all these moving averages, and it's very, very well supported. So assuming there's no curveball for Polos, and that he's not going to react too positively or not too gung-ho to the data, there's the only thing you could expect is that this is going to try and clip all these stops, clip all this area, and try and take a stab right back into those highs. Now, if Polos comes out and he's going to be super gung-ho, well, then those lows clearly are going to be very much at risk. But right now, I think it's hard to see, especially in the context, what's going to happen. Now, the other thing you have to keep an eye out for, what equities do and what does crude do. But again, especially if crude stays heavy, if equities don't go too crazy, it looks like the path of least resistance is going to be for it to attempt higher, not lower. We also have the RBA, so AUD/USD. We'll have to see what happens there, but here structurally this is bearish. This is our favorite structural short. We're still looking for new lows to print here, so we'll have to see what happens on the RBA. As long as we don't get any action that closes above the 73, we will very aggressively work our shorts on this. I'll talk about this in another video if I can. And if we break above the 73, then we could easily squeeze all the way back into 76. We'll have to reevaluate, but that's likely going to be a position to rebuild some new trades. But right now, again, possible upside 73s, but we're still favoring more downside. Again, we'll have to see with all this headline risk on the dollar. But and China, because of course that's going to be this could rip too if we get a lot of positive China headlines and Chinese markets or Asian markets get a strong bid. So that's pretty much where we stand. I'm trying to think if I forgot anything. Actually, euro, what's going on euro? No big change here for us on euro. Still chopping around those lows. The big areas or the big levels to watch is that 113, and we're going to continue to say exactly the same thing. If this cannot get traction below the 113, we still expect 115, 50s, 115 to print. We consider this a buy zone unless you get a very ugly headline. Any kind of trip back inside the zone, which is on chop, on no real headline, nothing of substance, for us is still going to be a buy for ultimately this moving back into more neutral territory, possibly all the way back higher. So that's pretty much where we stand, guys. Wishing everybody an awesome week ahead. Have a great one. Talk to you guys soon. Take care. Bye-bye.